The monthly candle is finally showing red, and it's a pretty decent sized monthly candle, taking you below the 9-month moving average. And everyone out there is starting to scream crash. And I'm just going to say at this point, we're not, against some kind of crash, against some kind of correction. But as of right now, I would be very, very aware if they are going to try to trick you. And it seems we have signals that suggest that they are doing just that. So even though this is a bad monthly candle, we have better information here. We understand that these yellow lines are our 68% zone for the month of March, and this is only the first week of March, and we have already seen some buyers step in at those levels. So we need to be paying attention to if they are trying to trick us to the upside. We're going to pay attention to both directions. We're going to get into that technical analysis because you have a lot of Sunday fun day to get to, and I don't want to take too much of your time, but I do want you to pay attention to some technical analysis today because the market opens tomorrow and we could be in for a wild one with all the rocks coming down the stream. That's right. We have a bunch of data this week, and so it's going to be a very important week to be trading like water and seeing which way this is going and making sure to pay attention to how we manage our risk. So let's get into it. We can look back from the past and see this 200 and see it's pretty normal for the stock market to revert back down to those for some corrective type moves. And we're almost in correction territory at about 10% right now. We're at about 8% actually. So, but you will notice once we actually lose that 200, we see rejections off of it. That's when it gets a little bit worse, but we've used it as support many, many times when you start to lose it with something bad, right? But you can continue to use it as support or not touch it at all. So we are in a period of time where we are getting a move down to the 200, which we haven't seen since October of 2023. And it's very normal to maybe once every year, once every 2 years to go down to that. But we can understand that the 200 is a level where big money is paying attention. And so there could be some buyers lurking in these areas. And the reason we were excited about this 200 was because of our monthly expected moves. That's right. These yellow lines, this is your 68% zone we use the options data to calculate. And that tells us that people were prepared or pricing in this type of move. And this type of move happened very early on in the month. So we need to be paying attention to if support comes in at these levels because we have a 68% chance to land in here and only a 32% chance to see something crazy to the downside. That does not mean we are not going to pay attention in case we can make that 32% chance thing happen. It just means, hey, if I have a bigger percentage here and a lower percentage here, I'm going to be thinking about this one a lot more, but I'm going to be aware how this moment can happen. And that's what we're going to overall talk about today when we go through some bearish and bullish things. Now, first of all, what got us into this mess, right? We want to do this in a way that's like really understanding what's happening here. We have the divergences, right? We saw all the divergences on the SPY. So this can be still a bigger correction, a bear market or some kind of crash. And it's mainly going to depend on if we see some kind of lower high up in these areas. And we're talking about that just because of the 2-hour signals, or if those 2-hour signals do fade very early on in the week, because we do have a bunch of data coming out. And just before we fully get into this, I do want to show off some of that data because it's very, very important. You'll notice it starts off on Monday with consumer inflation expectations, get a bunch of Japan stuff, right? But the next time, Tuesday, March 11th, we will get the JOLTS job openings. That's going to be a big deal. And then on Wednesday, we get the core inflation rate. So you can see, and then the next day, PPI, and then the next day, Michigan consumer sentiment. So you have a lot of very important data this week. So it will be a very important week to trade like water because we could be seeing more of that rip around kind of behavior. And that is displayed to us by our weekly expected moves. We have higher implied volatility than last week. You guys remember what happened last week? Well, this week we have more implied volatility. So even though this is suggesting it could be a base right now based on your 2-hour charts, we are noticing that we have bigger implied volatility. So we should be open to big swings coming into this market this week. And that would be very likely to happen because of the data, right? Because of the rocks in our stream. We're trying to trade like water and we got rocks there, so we have to make sure to pay attention a little bit to the reactions around those rocks. 594.09 to the upside and 557.75 to the downside for the SPY. Let's put this little sticker on there so you guys see it. So why are we paying attention to a daily or some kind of daily chart curl up here? It's because of the 2-hour chart. Now the 2-hour chart is showing divergence, but I want you to see how low this is. And this is going to be very important when we're talking about one, the bull side, but also the bear side. Right now, this is curling up, suggesting that early on this week, we are going to make an attempt to go up towards and try to take back that 5-day moving average. And you'll notice that these areas here could be important. This 585 could hold as resistance, and we'll see what happens with that. But ultimately, if this 2-hour curls up, the most bullish thing I think you could see is something like a touch of around 597.80. I think this level would be great. You curl back down into these areas with that data, and then on Friday, maybe we get even more, and this thing ends up turning to the upside. We'll see. But this would be a great way to head higher in the bullish case. Now we will notice that the 2-hour, if it would make some kind of lackluster move and then fail, that would be curling down into positive territory. You notice how this would take your MACD positive, but having some kind of lackluster 2-hour move that just curls back down could mean two things. It could mean we're setting up that trap one more time, trying to get people really, really bearish. Maybe we even go down lower to make people really bearish, but we want to see if we hold divergence down here on the MACD and RSI. Because if we're not able to hold divergence down there, yes, the percentages are still with you, but it starts to become more probable that you're going to see something crazy. So what we need to pay attention to, as far as, you know, everyone that's shouting stock market crash, even though it's something we're not leaning towards right now, at least I myself am not leaning towards some kind of crash or correction. I'm looking for a counter trend move or even some kind of recovery here because of the signals and because of the monthly expected move. But we're still going to be aware of it. Even though I see this as less probable, I am still going to be aware of it. And that's what trading like water is mainly about. It's being aware of both sides, almost putting yourself in a, yes, my trade is bullish, but almost a mentality of I'm almost always neutral. That way I can pay attention to signals and react accordingly. So what we're looking for from that 2 hours is to see that big extended move. If we do not get that extended move, we can drop down to lower prices. If we do not form those divergences, then we could experience one of those crazy moments where we see downside, downside, downside. Where we would start to really worry about that is when we lose that downside weekly expected move at 557.75. If we do not have those reversal signals confirming around these levels this week, we need to be paying some attention, okay? Now, going into the shorter time frame, something that we need to watch right away early on in the week is if this is pointing to the upside, that's great, but are we taking back the 5? Are we positive? The answer to that is no, we are not. You have divergence on your MACD, on your RSI at the same time. Both look very, very nice for this 30 minutes. So the 2 hour is saying I can go up. The 30 minute is saying, yep, I can still go up. And so most things are saying we're going to try to take back this 5 early on in the week, but I want to be aware of just in case something goes wrong. And how could we go wrong here? Well, we do see that the 30 minute is rather extended. We've seen multiple times throughout 2024 where we get that next lip down, especially when volatility kicks in, and then we create some kind of double bottom. We sweep the low, take out the stops, and then we make some kind of little divergence right in these areas. And that is something that I will be aware of early on in the week. That is a bearish thing. But right now, we're talking about things that could go wrong. Overall, the signals at this point are suggesting that they are trying to trick you. They are trying to tell you stock market crash. They're trying to pump out all this negativity in the news, in the media, in the price action itself. While it seems that the momentum to the downside is seriously slowing, and one piece of good news or one big buy could actually send this market not only to make that lower high, right? That is something we're seriously going to pay attention to on the daily scale, but it might even send you, because of the bearishness here, this bearishness at this level, according to the put volume, is almost as high as the 2020 crash. And that is very, very weird to me. It's weird to me because in 2020, you were falling through the floor by tens and tens of percent. This is only about a 7.5% move, and we're seeing people get as bearish as 2020. So be aware that if people get taken off guard, that can cause some kind of squeeze with this type of behavior. So we could even end up at something like 620 by the end of March, but this week might be the week to battle through in order to get through some data that sends people to feel confident in buying in these areas. So we will be paying attention to it, but ultimately this looks like it's trying to reverse back around for some kind of upward move from the daily scale, and we are, according to our MACD right now, going to pay attention to a lower high for the SPY. Qs, we're going to definitely be paying attention to lower high for the Qs, and we're going to discuss why. Now, the Qs have not made it to that monthly move yet, so let's just take a note of that. They have not made it to their monthly expected move yet, so there's always a chance that drops down, but look where it touches on. It touches on the bottom of my channel, right? I've had this channel up for, I think like 2 years now. And we actually touched the bottom of that. And the thing about touching the bottom of that, I'm not a big believer in trend lines, right? I don't take trades because something touches a trend line, but I will use it as a point to pay attention, especially if it's around a monthly expected move. And so I will be looking for that signals that suggest, hey, can the daily curl up here? And you do have those signals from the Qs. Very, very nice. And they're very, very significant for the Qs. So the Qs could see a great move here, but is that move just going to set up the lower high? According to your monthly expected move to the upside for the Qs, even if they do catch that bounce, everything goes jolly. Maybe you curl down right here, you curl back up. Well, around these areas, we're going to be paying attention to 2-hour divergences over the next couple of weeks. And that's just because we could be going into that lower high scenario according to the daily chart. So let's keep that in mind. Now you have a large amount of implied volatility. So I don't think this week will be just up, 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 up all the time. I think we're going to see a little bit of chop, but then maybe we end up in that upward direction. So you're going to be paying attention to 510.86 to the upside and 472.72 to the downside. Once again, we're paying attention to similar things, right? As far as if this is all going to fail, then you might see that lackluster 2-hour move like this, and the 2-hour is actually able to cross. That would be a bad thing. That would mean maybe we need to touch that monthly expected move or weekly expected move and see another point of divergence. If we don't make a divergence, though, you have to be very cautious about even a bounce down at these levels. So let's just keep that in mind. As we go into the 30-minute, we can talk about daily expected moves. Daily expected moves, we have 499.55 to the upside, and we have 484.03 to the downside. We see a very key level being this 502.50. If we can get up to there, well, 68% chance to land Monday in this zone, so we could see that curl back down and then set up some kind of structure to head higher. Now, once again, in these areas, we're talking about the bullish thing now, but just keep in mind, if that goes down too far and crosses that 2-hour, it is very likely to go in that downward direction. We're just staying aware of both sides at this moment. And you can see how important these levels are at this moment, right? If you do not make divergences here, we are at risk of a big drop. But we are mostly seeing signals that you would see in a bear market when they're trying to trick everyone to the bear side right before you see some kind of counter trend rally. Some kind of almost bear market rally is what we're looking at here in the data and the signals. So you do have that 30-minute divergence showing up on the MACD and RSI. If we're going to take back to 5, that seems like the biggest suggestion at this moment. But if we reject from that 5 again, look for that quick move to go touch that monthly expected move and make sure that divergence is holding at those lows, because these things will gravitate to those monthly expected moves, which means the SPY might even cut its for a little bit if the Qs do this. The important thing to note here about Monday is we'll see if the positivity continues, but on Tuesday we actually get the bigger piece of data, right? Tuesday is the day that we actually start getting that bigger data, so we want to be paying attention to those rocks down the stream. Now you might be asking, why does he keep talking about rocks down the stream? Well, because on this channel we trade like water, meaning if there is a piece of data coming out on Tuesday, right, say in the morning, right, Tuesday morning, let's just say 10 o'clock, all right, somewhere around here, there's some data coming out right here. Okay, well, if the SPY were to go up to these type of levels and be at resistance and get bad news, not only would that resistance cause that to fall down right away, but that resistance also be met with bad data, and that can really send you lower. Now, the other thing that can happen is you get good data, and this type of move ends up all the way at the weekly expected move very early. So there's a lot of ways that this can play out. We're going to be discussing this a lot throughout the week, but there's a lot of things to react to this week, and I think that's very important to just keep telling people, you know, something that will really help you out in these type of bear market behavior times is you're going to see big moves up and you're going to see big moves down. So you want to make decisions very intelligently with data to back it, such as a MACD crossing down, an RSI crossing down, resistance getting hit, filling a gap, and then seeing resistance come in. But that is something we want to be aware of, is this market most likely will be still a rip around kind of market because you have a bunch of data this week, and trading like water means figuring out which way that stream is going when that rock shows its face. Are we going to follow the water that ends up in some kind of meadow, or are we going to try to go against our signals that are crossing back down, not react, and then end up in the sewer? We don't want to do that, so make sure we're trading like water and paying attention to our risk. Now, after the SPY and the Qs today, I did want to just talk about the 10-year yield for a split second. We do see this over here. Now, remember, we really have called these bottoms well with 4-hour divergences. I don't think you necessarily have the best ones here, but this is an area where it can catch some kind of bounce, and we do have data this week. Now, something interesting for the 10-year yield would be to go test that 4.4 or even go up to the breakdown area, which would be about 4.47. This area here can hold as resistance. You will notice that that breakdown area is exactly at where? Well, it's pretty much right at the top of our left shoulder. So if we make this as a right shoulder and we curl back down, these yields could be heading down dramatically. This shows you how I think the lower high in the market could happen, because we could see these yields scream to the upside and then just fall back down. Now we'll have to pay attention to the mentality of people if these yields start to break down further. If people start to celebrate that, we start to see reversal. That's actually the recipe we're looking for. We're looking for the recipe where people actually do celebrate the fact that yields are coming down. We see big upward moves, and then that's when we'll look for those actual macro daily signals or even weekly signals that suggest, hey, this is the upward trap where people will not expect some kind of stock market crash or bear market, and that's more likely to be a time where volatility continues. As of right now, the SPY is showing those reversal signals, so you can see how both of these things might move up in tandem, but eventually they both might make lower highs, and that could be a bad thing. So what we're wondering is, around these areas, does the SPY actually turn back down, or does the 10-year yield turn down and people celebrate the fact that those yields are going lower, and we see some kind of bullish move for a bit of time here, maybe to get up towards 630 or something like that. So we will be paying attention to that for you, but it's important, and main point of this is just we could be seeing that next upward move for the 10-year yield for a couple of weeks here, and we're looking for that 4.48, 4.47 to come in as potential resistance. And if it does, we can know that these yields might be heading lower, and maybe we might want to pay attention to TLT, because that might see some big upside after this thing pulls down one more time. Another thing we'll be looking for is the reversal for the dollar. You can see that the dollar, we like 4-hour reversal signals, and we don't have it, so you still could have more time where this needs to fool around down here. But if the daily does curl back up, we can see snapback reactions to see any of these levels tested. Just note here about the dollar that you can see the dollar heading up and the market heading up at the same time, and that usually is an indication, if people are getting extremely bullish while that is happening, that you could have some insider selling. So we have the opposite of that right now, where the SPY is actually coming down pretty dramatically. And what is the dollar doing? The dollar is coming down pretty dramatically. Now, this could have a lot of things behind it. There could be a lot of reasons for the dollar coming down, but some of that might be because insiders might be buying at these type of levels, right? They might be buying during this downturn because they're not as scared of these tariffs as other people are making it seem. And that is something that I really want to pay attention to. But just to note, this red line over here did say, hey, the monthly curled up. So if the dollar has some kind of reversal, we still need to pay attention to it, because that's when extreme volatility can come in, even higher than what we've experienced now. And if you're thinking you've experienced a lot of volatility, well, you're at lower levels of volatility than back in December. You're at lower levels of volatility than back in August 5th. But at this moment, you're actually seeing the highest put volume that we've seen in a very, very long time. So you have to be aware of these kinds of things and notice that volatility. If that would curl down on the daily, this is how we could overall get the lower high in the SPY, is volatility is able to curl down, get some kind of retest in these areas around maybe 1683, and then we see that thing start to turn back up. Because this isn't a positive trend, we want to really be aware of that lower high in the market. And now you're seeing how volatility could subside with potential 2-hour divergences. And look how clean these 2-hour divergences. So pretty much a lot of these signals are suggesting that if you're not reacting to these, then you are going to get caught in some kind of bear trap. But we do have data this week, so I'm expecting this to be a little more rip around than just seeing a 2-hour divergence that just sends this thing completely down and sends the SPY up into the air. I just highly doubt that's how this is going to play out with all the data we have. But the signals here are suggesting that, hey, this isn't necessarily actually divergence, but it is a lower high, and that is curling down closer to the center line. line. So watch out if we see some positivity, because this just curled down, the SPY just curled up, and so positivity in the market would make a lot of sense. And then at the same time, we did notice on the daily scale, volatility here on Thursday was up by more than 10%. And guess what? We get that update in the SPY the next day with that 85% chance of an update in the next 2 trading sessions, according to the VIX. So the VIX got it right. If the VIX curls down on a daily scale, you're most likely going to see the SPY curling up on the daily scale. And you have 2-hour signals that support that narrative right now, even though you're not seeing that in the financial media that's trying to make you shake in your boots. And then we start to look at certain stocks, right? We look at things like Tesla. Tesla showing some very interesting things and being like, hey, I'm going down, 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 down. I'm chopping through this this potential trend line here, and that's perfectly fine, right? We're not people who just say, oh, we touch a trend line, we have to bounce from it, right? We're not those kinds of people. I look for signals around those type of areas, and we'll notice that Tesla does have great 2-hour divergence, and we notice the tapering that really came in. If you kept this kind of behavior, that would be very, very bad. But you notice you get that tapering to come in, you make all the 2-hour divergences, and they are super significant for Tesla. So I'm wondering if some kind of news is going to come out for Tesla, and Tesla's going to see a big snapback here. And this is where those monthly and weekly expected moves we give out on Patreon for these individual stocks will really help you. So if you're trading Tesla, monthly expected moves, weekly expected moves are fantastic to have. They will be very, very nice in understanding why we're paying attention to these type of signals now. Can Tesla head lower? How does this thing want to behave if we see upside? Well, that's where weekly expected moves come in, right? There's a lot of good things you can do. At this moment, though, I think Tesla wants to see a good reaction to 326.50. I think 326.50 would be fantastic for Tesla to get to, maybe even take you out of that weekly move, then curl back down, and we see this build up to a good area, get some kind of handle, and then curl up towards the end of this week or the beginning of next week. And I think Tesla could then curl up a daily chart. And the thing we're aware of here is, once more, volatility suggesting we should pay attention to it, the SPY suggesting we pay attention to it, and Tesla is also doing that, saying pay attention if this daily does curl back down. Not if the daily doesn't curl back down and creates that structure to head higher, but if it actually curls down in these areas, you want to be aware if that is close to the center line, because that could suggest lower prices. And if you do not make a daily divergence down here before earnings, that could be a big problem for Tesla. But Tesla is showing great signals that suggest a bounce here, and so it's starting to add a little more credibility to the SPY showing those signals as well, and volatility showing the opposite signal. So a lot of things here at the beginning of this video are suggesting that this is some kind of trick. They are trying to most likely trap the bears here. Even if it wants to be more complex than this, we can still pay attention to those divergences, but people are almost as bearish as they were back at the bottoms of 2020, and you're only 7.5% down for the SPY. Tesla has seen something much worse, but it is showing those reversal signals at the same time as the SPY. Amazon is another one that, once again, we're paying attention to lower highs, but this can see a big snap, right? We talk about those right shoulders that could have been on shorter time frames, and they end up happening a lot of the time, and people are very surprised. But I go, well, that's because everyone pays attention to head and shoulders. People think head and shoulders have to play out the exact same every time. I started talking about the right shoulders that could have been, and it started to make a lot of sense. So we need to be prepared for Amazon to be able to potentially even rip to 233.50. That would be very interesting, but you got to get through 213.52 first. Why are we talking about this daily scale turning up? Well, look at that daily RSI. Very, very flat down here, which usually means that you're seeing 2-hour divergence pop up. And you'll notice on the RSI, you show that that is very significant and you're holding every divergence point. You just haven't confirmed this yet. So the confirmation for Amazon will be when this gets a green solid closing bar above this red line right here that gets a solid bar, and you're kind of going, hey, I'm cool with that, taking back the 5 as well. So if that 5 is taken back, we can potentially get past that 213.52, maybe react to 218.50, and then see that curl down and see that good structure to head up. And you see how data could help us out with this, right? On Tuesday, maybe we fool around in here for Monday. We see Tuesday with good data. Wednesday, we get data people react poorly to. Thursday, we get good data. And then we have to see what happens on Friday. So there can be a lot that goes on with this, but the main thing is just formulating a plan based on the trade that I take. If I take the play for, say, Amazon, let's say I see first off in the first 2 hours of the week, I see a green bar like this, and I take the play. Immediately, I'm going to be looking at this 30-minute, understanding that this is still lower, even though it has divergence on the MACD and RSI, rather flat. But I'm going to understand that even if this 30-minute trails up for a bit and fills this gap, if it is still negative and turns down, we can cut this low and go make a new one. So that's just creating my plan for if it goes wrong, if this is going to turn down again, and my timing is going to be either a little bit off or completely wrong. I don't want to lose a ton of money. So I am going to potentially have those plans in place in order to manage risk if the opportunity shows its face. And the good part is Amazon looks fantastic, and it hasn't even confirmed the signal yet. You're starting to see a pretty good amount of trend here, if you will, where we're seeing 2-hour divergences pop up all the time for a lot of stocks and even the indices. So right here we're noticing, remember we were talking about how we were seeing things like this in the, I believe it was the SPY, and we could see that next drop, and we got that next drop, and it's going to create potential for 2-hour divergence, and that's exactly what ended up happening. So that's great, and it's down by a monthly expected move for the SPY. But I'm showing you and talking about the SPY because I'm talking about stocks that can potentially affect that indice, and the Qs are showing the best reversal signals. And what is it for Nvidia? Nvidia now shows that type of behavior that was almost like the past, just a little bit less volatile, really just seeing this a little tighter, come down into these areas, and look at that, just like over here. If you go back a few videos, we actually said this. We circled this and we said, you're looking for this right over here. And look what you have right now. You have it. So can we see one of these moments? Now, we do have data, so it would be very unlikely for none of that data to shake anything up this week and just see that upside move kind of like we did over here. It is more likely, I think, for us to go through some volatility for a moment, right, throughout the week, but then see if we end in that upward direction. The reason we want to see if we end in that upward direction, why you need to be paying attention to this 2-hour divergence, is because everything else, a lot of other things are showing good stuff. And Nvidia, if it curls up the daily scale, it actually has daily divergence down here on your RSI, so you want to be watching that. Now, it still invites fake outs, right? A lot of people talking about Wyckoff and things like that. So if this sees some kind of move that the daily is able to cross, and you see maybe 2-hour divergence this week, even if we break out of this and you see something like that, we got to be careful with it, because if the daily rotates down here, that could mean volatility is starting to see that pullback and rotate back up, and we could see lower prices, and we might see an upside trap very fast. But I still am not the most inclined to believe that. I think people are very bearish to the point where we could see something crazy in the next couple of months and see some big upside moves to do what we've been talking about for the past couple of months. And even with this downward turn, we were going, way too many people are taking bearish bets on this. Way too many people believe stock market crash. And usually that's not the case. Usually you do see some kind of upside move, whether that's a lower high or a higher high. I don't care. I more care about the psychology of traders and them saying, are they going from extremely bearish to ultimately very bullish all of a sudden? And then most people will be taken off guard if that thing actually did crash down. That's more what I'm going to be paying attention to, because in this environment, if people have extreme levels of put volume, that would mean that, I mean, if you just pull up that survey real quick, that would mean that about 60 to almost 70%, if those neutral people shift, 60 to 70% could be right about a stock market crash. And that is probably the most rare occurrence that you will ever see. So I would pay closer attention to the fact that you have daily divergence for Nvidia, you have 2-hour divergence suggesting that that daily is going to catch a move. But if I see reversal signals, I need to be paying attention to that. And that's just trading like water. Meta, very nice trade setup for Meta, right? Going to that monthly move. If you were paying attention to 2-hour divergence here and this channel, then you must be happy with it. So thank you so much for subscribing, and I hope you found this information helpful. But now we have new monthly expected moves, and what is Meta doing? Well, one, it's going to the downside, down 2 monthly expected moves, but we're going down to the area where we said that we could get to from those signals, and we're there, right? We're testing the breakout area. That's fantastic. That's why those lines are there on the chart. And we were always leaning towards Meta making an attempt at a new high. But as we went to lower levels, now we do want to be a little aware that that is starting to go negative. So we want to be a little bit open to a lower high from Meta, but Meta is one of the ones suggesting it can still take out this high and go make a new one. So if we're going to pay attention to Meta, remember, we've been saying this during this downturn, Meta is going to be great to pay attention to if we see a divergence form at these highs, right? If we do not stop and make that good pullback and see that turn back up, we could just be turning down on the daily scale. So be watching out for this in the future. But right now we need to talk about the fact that this upward move could even happen, right? That hasn't happened yet. So we need to be paying attention to, is that possible? So can this daily turn up as it's close to the center line with no divergence above it for Meta? You see that the 2 hour is holding every divergence point. Now, this did look the best originally, but I think Amazon actually looks the best now because it did not even violate that much or at all on the MACD, but Meta did. And the thing about this is it might have done it on the MACD. It's still at lower levels. But if you look at this RSI, it held the whole time on the RSI. You can see that very, very clearly. So this is a nice reversal signal, and now you see how that 2 hour could actually send this daily higher in the near future. If you go into a 30-minute chart, you're going to notice that we violated divergence though for Meta. So Meta is a little more open to, hey, we need to make that higher low. Hey, we need to make that another trap to the downside before it can turn in that upward direction. So we will be watching Meta a little bit closer, but Meta has great 2 hour reversal signals. If those start to prove themselves, if we start to get back above this 5, I think we could get a solid reaction to something like 680. And that would be a great level to get to, see that consolidative move, retest the 5, and then see that turn back up to the upside. That would be how I think the market overall wants to head higher. But it's important to understand that these things that we're talking about can change throughout the week. Price action is the most important thing, right? So if the price action isn't showing this type of behavior, I want to reassess and I want to reform my plan. Microsoft, that's spent a lot of time in here looking for that reaction to about 418.50. We see the 2 hour doesn't necessarily have the best divergence. You actually have one little one on the 30-minute and the 2 hour showing right here, but it's not on the MACD right here. But you do see how if we're rejecting here, that could be a 30-minute higher low. And where could that really get us to? Well, we want to be watching that 405 very closely, but ultimately, if we can get a big reaction to around that 418.50 level, that would be the best place to see that round out and get that pullback so you can get almost a little head and shoulders, and you're starting to see a pretty good theme here. Now, the thing about this is if you see that upside, we still want to be aware of a lower high if the daily chart is able to curl up, whether that is going to be some kind of quick move that just retests, then we get bad data. We'll find out, but that's where we'll just watch this daily and see if that's able to curl down or look for 2 hour divergences in these type of areas, or even up towards our sell zone where those sellers could really be lurking. So this will be important for Microsoft, but you see how it's holding up really well in our buy zone at this moment. So very interesting. Google as well, seeing if that daily can curl up. Once again, I think you want to see a big reaction here, like a big one. And I think a level of 188.39 would be fantastic. So about a 13-point move. You see it get to that level. Maybe we pull back to retest that 182.59 for a moment on the 30-minute and curl back up. Or on the 2 hour and curl back up. We don't necessarily want to see the daily confirm back down in negative territory. That adds a lot more credibility to lower prices. So we don't want to see that on a lot of these stocks. But if those things are showing, then we know this might be a lower high. So that's what we'll be paying attention to throughout this move. As of this moment, the 2 hour, nothing really to go off of for Google. So very interesting. Now, if you remember, this is able to take back the 5. Now, why was Google able to take back the 5 while a lot of stuff actually struggled when they made similar looks here on the 30-minute? Well, look at the significance. Look at the significance of this divergence right now on the 30-minute. It's very, very significant, and it's very significant on the RSI and MACD at the same time. Look how upward that direction is. If we draw a line here, it's like up. Okay, so this is why we were able to take back the 5. We saw an extreme amount of weakness right here because of the significance of that divergence, and you even had triple divergence on your RSI. So this was able to curl up the 2 hour chart. Is the 2 hour safe right now? No, it is not. Even if this is a great move, this is fantastic, whatever, we're taking back the 5, you're building liquidity, and if that 2 hour drops down, you can cut this low and go make a new one. So just be aware of that for Google. Now on the 30-minute, you do have some things that suggest that is very possible. You do see a divergence on your MACD, but not the best on the RSI. But overall, you have a 30-minute that is really close to the center line. So if you want this to not do something bad. You probably don't want that 30-minute to cross over early on in the day, and if it does, then you want that thing to whip back up very quickly in these areas for Google. But once again, Google, it really looks like it's trying to base out in some way. It could become more complex, and price action will be the most important, so I'm going to make sure to trade like water, even though this one as well is very close to curling up on the daily chart, and I am leaning towards some big positivity. I need to be aware if something is going to go wrong, and Google does have a signal right now that suggests early on in the week this might see another dip down to maybe get people bearish on Google again before it's able to turn up. But just in case it's something worse for Google, that's why I pay attention to it. Now we get to the fun stuff, and that's AMC and GME, and I'm only really going to show off one big thing here, and that's just daily charts. I don't think we have to overthink this at this point. We know there's some divergence down in here. That's fantastic. But overall, daily charts are really going to matter for AMC and GME. So the level you have to break through to see something crazy this week is only 343. And you see how if you just get one daily bar to curl up like this and get up to something like 323, well, if that unleashes that momentum to the upside, we can see this thing send past that 343. But just to note here, this is a battle zone. This is where the real battle begins. And we've seen countless times where we go up even past that zone and we see immediate selling of AMC come in. So just be aware that this purple line matters. You really want to blow past that, and you really want to blow past this about 380 level and start to get back above that 437. So this will be very important, but as of right now, I just want to display to you, while everyone is, scared of this market, scared of this market, scared of this market, AMC is showing downside movement in the price action, but sees a major divergence. Like, look how significant this really is if this would cross up in the next 2 trading sessions. That is one of the most significant divergences on the daily scale I've seen in a while, and so I'm going to be paying close attention to it. And if this thing curls up on the daily scale, your boy over here most likely will be taking some 2-month or month-out options for AMC. GME is showing a similar thing. Let's give you guys that updated level for GME. As of right now, that would be 25.79 to see something crazy. This is the level where people expect it to get to, and it's very small. So once again, you have a smaller range for, I know it seems big, but GME, this is a smaller range still for, and even AMC usually has more implied volatility than that, but you'll notice the divergence. You'll notice the significance of that divergence, not even getting to oversold territory. If this actually did see that green bar up, that would mean that GME has a very good shot to cross through something like 25.79. Maybe it holds as resistance this week, right? That's where the fight begins, but we want to see that strong move get past 28.92. This high right here, we need to get past. You see the wicks coming in that area. So we really want to see a firm close above that 28.92. That would be very nice for the stock. But if we react up to there, we can obviously see curl downs and things like that to form structure. But you do have divergence on GME. You have divergence on AMC at the same time on the MACD, on the RSI. Everything is significant across the board. So I'm personally I'm right. I try to keep myself in that neutral stance. I can read into a million things people are reading or saying about GameStop and AMC and saying about the market and these things, or I can be accountable for my own trading and be like, hey, if this thing curls up, I don't care what the media says. Momentum is going to the upside. I'm going to take the play and have a plan for if things go wrong, and that's the plan with GME and AMC for me. Wanted to talk about gold. Now, to talk about gold, I really like to look at the futures here. Now, the ultimate thing for gold is, is this overall some kind of ABC move to the downside? I think that's very possible. I think it's very possible to see this thing go fill a gap. But as of right now, it's very positive. So if the daily curls up, I think you are set to go to 3,000. I think this thing could get as high as like 3,400 if it sees that upside move and doesn't create a little divergence here. But I'm also aware that 3,000 could be a big trap for it. So if we see divergence here, you got to be a little bit cautious with it at this moment. So what's the 4-hour telling us? Well, the 4-hour was able to find that base and get back above the 5, and we've held above that 5 sideways for a while. So we're really looking for that breakout and that close above 2,934. That would be a great level to break above. And you'll notice we are reacting right up up to that key level, which is right here, and then we're reacting to that level, consolidating. And if we see that break to the upside, that can be where this thing starts to catch some good positivity. Now, if this 4 hour starts to go negative, we have to talk negatively about it. But for the time being, we are above the 5. We'll see how the price action goes over the next few days, and then we'll be able to talk differently about it if something changes. But right now it looks like, hey, if we can break something above these levels, above these resistances, we could see that 3,000 hit, and I think we could go all the way up to 3,400 if we don't make a divergence. So very interesting for gold. We do give out GLD, weekly expected moves and monthly expected moves. As of right now, that would show, as of right now, on your MACD as like, hey, we're failing, but you can see how sideways we are and how we're holding up at the 5. So all we need is that extended move. If the daily turns up and makes divergence, we know what the deal is there. If the daily curls up and wipes out that divergence, then you could see this thing go much higher. Lastly, we are going to talk about JPMorgan. JPMorgan, right? We're trying to give a little more versatility in some of the stocks we look at, right? We're trying to get some from different industries because we pay a lot of attention to tech stocks and things that are, big market cap in these videos. But I want to change it up throughout 2025 and make sure we're paying attention to other things as well. And I think JPMorgan's a good one to keep on our radar because it showed us the 2 hour divergence and boom to the downside. What a good trade. Thank you so much if you were subscribed and you were able to make some money out of JPMorgan with that. And we noticed that we came down to the levels we really wanted to, right? We were suggesting the worst that I think this could get is that 243. And that actually happened, okay? So if this is gonna get really bad, we might see a reaction down to 230 before we catch that bounce, right? Get to that 200, catch a bounce, and then see that thing curl back down. That would be a very bad lower high. From what I see, but that would drag your MACD lower. As of right now, your MACD is close enough to the center line where we need to be aware of a lower high, right? If this thing gets really excited, we need to be aware if that's a lower high, but we didn't have divergence, anything like that. XLF is showing similar signals, and does this daily have a chance to curl up, right? Can we see positivity in any way? That's what we care about for this week. Right? Well, the 2 hour is showing some interesting things. You have the 2 hour divergence on your RSI. You can see that down there, pretty damn significant, but we see that the MACD has really given up those signals. So that's a problem, but it is still there on the RSI. So maybe your MACD is just not liking it. But the 30-minute is showing that divergence on the MACD, suggesting that the 2 hour is about to get a cross up. So this means that there could be an attempt from JPMorgan to get to something like 266.50. If JPMorgan's able to get to 266.50 and see that curl down, curl back up, we might just have a simple head and shoulders, and we might be heading to new all-time highs for JPMorgan. So just be aware of that. But this one as well, just to show this off, it's showing something that's in a different category and showing you it has reversal signals too. So everything is gearing up like we're about to see everyone get tricked at the same time. But it's weird to happen on a week where we get a bunch of data because we have a bunch of implied volatility, a bunch of data. We need to understand that this could be a rip around kind of week that then decides at the end of the week which direction we're actually going. So let's just pay attention and make sure we're trading like water. And the main takeaway here is let's just see if the signal plays out. Right? This is overall what we react to. I like to react to signals that are around that monthly expected move, and this is suggesting that the 2 hour divergence can take you to 594.09 this week, right? We can see a solid 2 hour move up into these areas, so we'll be paying attention to that throughout this week and paying attention if something goes wrong. And that's all we have to do, and we have to just understand our plan before going into the trade, right? The saying that I took from, I can't remember who, but I really, really like their saying, it's plan the trade, then trade the plan, right? And if you have a plan for if something goes wrong, you potentially have a better spot than many traders because most traders just take something and hope and hope and hope it goes right while you are being accountable for your trading, right? Something that I like to say is be accountable for your trading, have that plan for if something goes very right, but have that plan for if something starts to go wrong, and you'll be quicker to react because trading like water is an important thing, and other people will start to be like, oh, I hope this bounces down at lower levels, while you're just going, hey, this is heading down until it tells me it's turning back up. Thank you guys so much for watching this video. I really do appreciate it. I hope you guys have had a great weekend, and I look forward to doing some live shows all week long. If you would like to join us in the morning, we do go live at the open every single morning. When that market opens up, when that bell goes off, and then we talk about stocks, you can come in, you can ask about weekly expected moves, how we trade around them. You can ask about anything. You can give me a ticker to look at, and I will look for you. But it's a lot of fun. I just appreciate that everyone's growing this community. We're really growing it together by liking these videos. So thank you so much, and I hope you have a great day. Peace out.